Good morning, everyone, and welcome to the Nudge Budget broadcast. My name is Laura Moniste Aragao, and I will be your host for the next 20-30 minutes as we discuss one of the most important budgets we have seen in recent years. I'm delighted this morning to be joined by my panel of experts, our two co-founders, Jeremy Beament, who will today summarise the budget highlights, and Tim Perkins, who will look at the budget through a wellbeing lens and its impact on corporate reward and wellbeing. And last but by no means least, Richard Sadler, Head of Reward at AXA, who brings that real HR practitioner lens to this discussion. So, wow, guys, what a day yesterday was. Certainly, I think we can all say more than a typical standard budget update. In fact, in less than 24 hours, I mean, it's crazy because it's only been 24 hours since the budget was released, we've read here at Nudge 47,000 words across 179 pages to bring you this briefing this morning. So, of course, we're going to touch on the headlines, but also, and importantly, some of those hidden snippets and understand, what are the headlines not publishing and what are in those 179 pages. And really, I guess, as an essence, this is what we're all about. We are there to help our users and the HR community distill and understand, let's face it, this ever-changing and complex world of money. So, we do these every year at Nudge, and typically we have lots of weeks to prepare, and there are lots of 99% knowns that we can research and prepare before the day it's actually released. Now, this year's budget, due to unforeseen circumstances, you have a new in the job chancellor. He had to not only deliver a budget that set the stage for 5 years of Conservative government spend, but one that confronted the UK's most pressing issue, the health and economic impact of coronavirus COVID-19. In the last 24 hours alone, we have seen the stock market plummet, interest rates cut by 0.5%, and a budget that distinctly became a budget of two halves. The first, a really coordinated response to the pandemic of the coronavirus. The second, the long-term investment plan focusing on the UK's prosperity regarding infrastructure and levelling up in the regions. The one thing I think that became very, very clear is the government are spending big. 30 billion big in addition to the planned spend. And that is absolutely in order to boost the economy and get the country through the coronavirus outbreak. Add to that the announcement yesterday as well of interest rates, as I said, being cut by 0.5% by the Bank of England. They are doing all they can to prevent this country going into another financial crisis. Yet, despite these two financial stimuli, the stock market unfortunately still fell yesterday by another 3.5%. So, what does yesterday's budget mean for all of the businesses that we all work for and the HR world that we all operate in? What we're going to be doing this morning, as I said, over the next 20 to 30 minutes, is we've grouped the budget discussion into 5 theme areas. First of all, the impact of the budget to family, the impact of the budget to women, impact on pensions. It wouldn't be a reward and benefit briefing if we didn't touch on pensions. And of course, the impact to your people's money. And finally, as I alluded to, we're going to bring out not just those headlines, but those nuggets that are hidden in those 47,000 words and 179 pages. So, a lot to cover. I think to get us started, let's go over to Jeremy to take us through some of the budget updates on all things family.
So yeah, the first update was more than doubling of the annual limit that people can make into junior ISAs and child trust funds. So that was increased from £4,368 up to £9,000. Just a little financial education nugget for you there. Despite the fact that the junior ISA regime actually replaced the child trust fund regime nearly a decade ago, there are still 1 million policyholders of child trust funds, despite the fact that barely any of them can be accessed online, and they're typically up to double the price in order to administer them. So one of those ones for you, if you're one of the people there who's got a child trust fund, something for you to look at. There was also an increase in the neonatal pay and leave for those with babies who have an extended period of time in neonatal care. So that's going to be up to 12 weeks in paid leave. And then finally, there was also a consultation on the design of carers leave, which is going to be a new in-work entitlement for employees with unpaid carers responsibilities.
Okay, yeah. So I guess Tim here from Nudge, thinking about that from a reward and benefits perspective. So junior ISA, so as a parent of a 9-year-old and a 7-year-old, I have one child in a child trust fund and another in a junior ISA. And even somebody who works in the industry finds it really complicated to understand the difference between the two. And I think in this new world where financial well-being is very much a workplace solution, I think more and more employees will be looking for support from their employers to understand those differences, and particularly where there are products that are administered directly from payroll. I think it was really interesting on the caring announcements, so the two that you mentioned there, Jeremy, and I think, again, through that well-being lens, what that demonstrates to me is that there's both opportunities to support the mental well-being, so that's security. If you have got a poorly baby, that's security of getting support, but also obviously the financial support as well. So it felt, with the trigger being coronavirus, obviously a well-being matter, it felt like a well-being budget in many ways.
And Richard, it would be great to hear from you. There's been a lot of changes over the years, as we know, to employer provisions and support that we can give our people when it comes to childcare and family support. How do you communicate and really effectively get your people to understand all of this complex change?
Well, you're right, it's a huge challenge, and we work in financial services, so you may think, well, actually, our overall understanding amongst our employees of such services is pretty good, but obviously that isn't always the case, and that's something that we want to help with. Our current provision is pretty good in AXA. In fact, it's very good, but I think it's often seen as quite fragmented, and people find it hard to put the pieces together. So this is one of the reasons why we are really focusing on relaunching our wellbeing proposition across 4 pillars. So financial, social, psychological, and mental health. So we're launching that in a couple of weeks, and Nudge is going to be part of that. And I think it's that wrapper, it's the bringing it together in one place and coordinating a really consistent and clear message that allows people to pick through it and understand what they actually have available to them. So that's really what we're focusing on, and it really sort of sharpens the knife at the moment with all of the concern around Corona, that we get this absolutely right and really bring out the things that are important to our people and they need at times like this.
Yeah, brilliant.
Absolutely. Fantastic. So second theme we wanted to touch on in the budget was any updates in terms of gender equality and looking at the support for females.
Yeah, so if I could pick a word for that, I would say it was meagre yesterday. So the last point I made around the consultation on the design of carers leave, that will impact females because women are disproportionately the people who take on this responsibility. There was also the abolition of VAT on women's sanitary products. And then there was a little hidden change, which was a service improvement to the tax-free childcare scheme. And the idea was to make them more compatible with school payment agents. And again, because women disproportionately are affected by this because it's them who are taking on a responsibility. That's something that will be a little bit of meagre support for women.
Yeah, and I think to pick up on that point of it being meagre, Jeremy, so when you bear in mind how prominent the gender pay gap is, the gender benefits gap, which we did a webinar on a year or so ago, and then also the gender advice gap, so the fact that women are less likely to go and seek advice, it would have been really good to have seen more. And there's some interesting debate on Twitter this morning that I saw around the sanitary tax, the idea being that actually perhaps it was just a political point scoring with the EU, because of course the VAT was an EU-driven tax on that. So 2 fingers to the EU as part of our Brexit transition.
And I think, distilling that as it was so meagre from a government provision support, It was interesting for myself, Richard. Last week, I had the pleasure of being invited by AXA to speak at a financial wellbeing event that you were holding specifically targeted at females. So it'd be great just to understand from your perspective some of the things that you are doing as the employer to help support that gender provision gap.
Well, I suppose the first piece is really close to my heart. And apart from reward, I look after HR analytics, so we're a data-led function, really trying to understand the drivers, the gaps that we have in our organisation, not just for women in terms of their pay, but also across some of our other kind of other representative groups. So I think really getting underneath the data to understand what's driving some of these things and get a clear understanding of how we might make a difference is the first piece. Then we have a whole host of other initiatives that our excellent D&I team are leading, including the kind of Women in Finance initiative, and looking at flexible family policies. There's a whole host of things that we're doing. But for me, it starts with a really honest understanding of what's actually causing the gap. And I think from that, then you can make some really clear decisions about what you're going to do about it. And it's not just in the UK that we're thinking about it. AXA Group is very clearly has this high up in terms of its priorities and trying to drive down that gap across all of its entities. So we really do feel like part of one coherent whole, and that we're pushing forward this agenda as hard as we can.
Fantastic. Now, I mean, it's great to see that employers are really the ones that have that onus and are being proactive on supporting diversity and inclusion. Great. Next theme, Jeremy, we're on to pensions.
Yeah, so quite a few bits here. So number one, just outside of the budget, the interest rate cut will have had yet another impact on defined benefit deficits. So companies really have had no luck here for over a decade. The second piece was actually something that the government didn't do, which I wanted to just draw out here. So there's an anomaly for those people who are earning around or below the personal allowance of £12,500, that they're not getting that automatic tax relief into their pension schemes. And actually the government had a real opportunity to just solve it, but they just launched yet another review. And I think that this really did provide a poor message on financial inclusion. Also, change to that beloved item, the tapered pension allowance. So for both measures of income, there was an increase of £90,000. It was doctor driven because basically there's this anomaly that doctors are not incentivized to do overtime because they aren't able to build their pension up over a certain amount. So to remind you, the threshold income, which excludes pension contributions, has increased to £200,000. And adjusted income, which is the other measure, which includes all pension contributions, that tapered annual allowance starts at £240,000. But companies really have been spending a disproportionate amount of time administering this already. And at the very high end of people earning over £300,000, the amount paid into a pension reduces to £4,000 from £10,000, which was the previous tapered amount. And then the final item was the lifetime allowance increased in line with the CPI to £1,073,100.
My goodness, it's complicated, isn't it? I think with the penalties for over contributing being so punitive, people are going to need help to really understand this stuff, and inevitably they're going to look to their employer for that help. So I would encourage employers to make sure they're really clued up on this stuff and budget an extra bit of time to support the higher earners trying to understand this. I think increasing the pension threshold is a neat way of directly supporting the coronavirus efforts, but of course it's also going to benefit other high earners, and it does nothing to simplify that excessive complexity. So surely, and this is a plea, an overhaul of tax relief needs to be considered before too long. And then just to pick up on your point, Jeremy, around the interest rates drop, I think that this is going to be felt and the subject of lots of discussion with trustees. And I think ultimately it's probably going to accelerate the demise of DB schemes, which reminds me of the game Pass the Parcel, where you've got the government pass the responsibility to employers, and as we move away from DB to DC, that in turn is the employer's passing responsibility to employees. That's going to need, it's going to mean employees have to be a lot more active in understanding their pensions and making the right decisions in terms of their contributions and retirement. For those people who get that wrong, guess what? The parcel is going to be passed back to the government, who are going to need to pick up the pieces. So yeah, really interesting to see how there's still a lot of work to be done.
Just generally on the crisis that we're going through. So I read an amazing and worrying statistic that this is the fastest ever bear market in the US stock market. So a bear market is where the stock market falls from its peak to its current point by 20% or more. That's what defines a bear market. So also there's going to need to be a huge amount of education in a defined contribution environment about the fact that this is the absolutely worst time to panic and switch over to less risky investments and so forth. So what we're seeing is this behavioral psychology playing out, things like herd mentality, fear, uncertainty and doubt. And I think that the financial wellbeing programs of people out there need to be tackling issues like that and giving people that confidence to be able to control their destinies.
Yeah, 100%.
I think that's right. I mean, I think in our business, obviously, there's so much focus on Corona at the moment and contingency planning, and a lot of activities and comms and various things are being pushed back as a result to focus on that. But we're making the decision to push ahead with the launch of our new wellbeing proposition for exactly that reason. So we want to try and bring some stability, we want to try and bring some security to our people, and actually there's probably no better time to do that.
Yeah.
And to really get that message clearly out there.
Yeah.
Fantastic. Moving on then to our people's money, Jeremy.
Yeah, so I just wanted to make a point that a lot of people wouldn't have noticed that in the document, the budget document which we've read through, they've actually specifically called out something called the Breathing Space Initiative, which is still going ahead. So it's a government-led initiative around helping people with problem debt. So you can see here that the government are definitely taking a firm stand against debt and organisations who are manipulating people, and that's going to become even worse in these months ahead as the economy struggles. So I wanted to call that out. The big one that everyone's probably already heard is the national insurance threshold increase to £9,500. So that's going to help around 31 million people by around £100 a year for the average person. The interest rate cut. So a little stat for you. So the average person who has £150,000 mortgage will save around £20 a month as a consequence of that. So you can see there's nearly £350 extra in people's pockets. And then finally around sick pay. So temporarily enabling claims from the first rather than the fourth day. Allegedly, according to the paperwork, the guidance has already been issued to employers. So yeah, hopefully that's already landed in your inbox.
Yeah, I think to pick up that last point, so the bit that stuck out to me listening to the Chancellor speak yesterday was around sick notes without seeing a doctor. And I've heard already from our clients that they're uncovering cases of people not being entirely genuine. So yeah, I think it'll be interesting to see how much that accentuates the absence. And I think it also then, the other thing that popped into my mind listening to it was the surge that we've seen in online GPs. And I know a lot of them are making a play as workplace providers. There was quite an interesting expose on Newsnight a couple of weeks ago, though, around actually the clinical effectiveness of some of those apps. So if you are using this as a trigger to consider those, it's just worth doing your digging to make sure that they are giving the clinical excellence that your people deserve.
Yeah, that's interesting actually, because one of the products that we sell to our customers is telemedicine, is online GPs, and that was on our list to introduce this year as part of our wellbeing proposition relaunch. But actually, we're pushing that up the agenda, trying to get out there faster, because we think they can really help at this time.
Yeah.
But absolutely take your point about making sure that it's really effectively landing and people are using it.
Yeah, and then on the national insurance, which you spoke about, Jeremy, I mean, I think of this as the country's hidden tax. So it's great that it's being cut. What would be really good is if people actually understood the thing in the first place. People don't understand national insurance.
I think people still think, don't they, that there's a little pot with their name on it,
yeah.
that their national insurance contributions are going into their state pension.
Yeah.
Sorry to disappoint you, that's not happening.
Exactly. So if we're talking about people budgeting better and really understanding their money, they need to understand the national insurance. And again, that demonstrates the need for financial education that focuses on the whole realm of money, including some of those basics. What were the other bits I picked out? So really nice to hear that the living wage is being extended downwards to workers from 21 years of age. That's nice to hear. And then on the point around the breathing space that you mentioned there, Jeremy, the government also announced they're bringing forward legislation to allow credit unions to offer a wider range of products and services to their members, quote, to supporting their vital role in financial inclusion. So I think that's brilliant news for those employers who want their financial wellbeing program to include products from an ethical provider, and obviously credit unions very much fit that mold. So that was really encouraging to hear. Yeah, don't know if there's anything else that came to you, Richard.
No, I think that's an interesting point. It's around the ethical kind of financial products, and as a professional reward space, you get approached by a lot of these things, or the potential providers who offer services, and it's hard to pick through it from an ethical perspective. So yeah, it's helpful to have a bit more guidance there. Yeah,
fantastic.
So just finally, as we said, we would bring to you some of those other more hidden in those 179 pages nuggets. Jeremy and Tim, can you just highlight a few of those for us, please?
Yeah, so hidden deep in there was confirmation on something called the access to cash legislation. So this is a really interesting one, where if you look at a country like Sweden, for example, that have become almost cashless, they're actually retrenching from that at the moment because a huge amount of risks are involved, where, for example, if a foreign government were to hack that country in the future and bring down all of the electronic systems, there'd be no way of actually trading money. So the government are actually retrenching from a cashless society and legislating so that the supply and access to cash will remain in force. So I thought that was a nice little interesting nugget. The announcement of the insurance premium tax, IPT review announced. I think a lot of reward practitioners will be relieved that there wasn't yet another increase, as there nearly always is. That's such a hidden tax.
Particularly AXA, I guess. That's key to your business, isn't it?
But yeah, the impact on private medical insurance there and other benefits, but maybe that's it's coming. And then the final one I was going to call out was the 12.2 billion for affordable homes programme. So I think a big challenge for employers is having their people able to live near enough their offices, particularly those based in cities. So it'd be interesting to see what the impact is there.
There are a couple of bits, extra bits for me. So number one was just how many reviews were announced. So I did a quick Control F on the 179 pages, and there were hundreds of mentions of reviews. And I think that's, in many cases, is frustrating for business. It's difficult to plan if you don't know if something's going to change. So IPT being just one example of that. The other bit from an employee benefit perspective that jumped out was around cars. So as any drivers will know, there's two barriers to electric car ownership. One is the paranoia about whether you're going to be stranded with no power, so your distance from charging, and the other is the cost, the expense. And so there were a couple of things announced. So number one was a commitment that you'll never be 30 miles from a charging station, and the second was a commitment to reduce the taxes on zero emission vehicles. So yeah, having been to a few benefit roadshows recently and spoken to people from company car providers, I fully expect an increased interest from employees in company car schemes, specifically for these zero emission vehicles.
Any plans, Richard, on company cars or car schemes as part of your reward package?
I was just smiling wryly, actually, because later on today we've got a HR leadership team meeting. One of the subjects is exactly that.
Okay.
So we're thinking through some of the options around both towards the trade and perk vehicles. But yeah, it is hard to predict exactly where that's going to go, but absolutely always more interest in electric vehicles, hybrid vehicles, and trying to take account of that.
Yeah, great.
Brilliant. Well, as I think we've just heard in the last 20 minutes, there's a lot within this budget and it is quite complex, and has reinforced what Tim said. Still a lot is under review, so still is more to change, more to come, more to digest. Hopefully here at Nudge we can help you do that in sessions like today. There will also be a follow-up of material where we will send you a recording and some summary notes from this call. But really, you know, to reinforce the listeners on this call, most of you wear HR, reward or wellbeing hats. And I think it's clear from this budget that distinctly had two parts. One is absolutely how can we secure this country in a time of economic and health crisis of coronavirus. For the second, how can we lay foundations of prosperity? And that same goes for our people and our companies and our wellbeing strategies.
Yeah, so I think, you know, wrapping this up from the with the audience in mind, you know, a reward and benefits audience in mind, I think it's widely recognised that a wellbeing strategy encompasses three parts: health, mental, and financial support. And whilst coronavirus is clearly manifesting itself as a health crisis and undoubtedly causing mental stress and anxiety, as the budget recognised, the bigger knock-on impact is the financial shadow that it leaves behind. And that's not just at a macroeconomic level of productivity and so forth, but that comes down to that personal level, essentially financial well-being. You know, this is what financial well-being is. And so pretty much everything announced yesterday can be tied back to financial well-being. And you know, whilst the government are picking up some of this, and there was it being a £30 billion giveaway is evidence of that, there's also growing signs of the buck being passed to employers. I gave one example with the pensions earlier, particularly big employers. So over the next few months, your people are going to need your wellbeing support like never before. And it's these next few months where those well-planned and structured wellbeing strategies are really going to come into their own. Thinking about a few examples, a lot of travel has been interrupted. Is your travel insurance up to scratch? You know, is it going to cover it? Is your physical well-being support limited just to a gym membership, which with all the sweat flying around is quite frankly probably going to be a no-go area for the next few months? Is financial well-being support reliant on face-to-face gatherings, or is it really just interested in pushing products? So I think as an HR professional, you can't really influence the spread of coronavirus, but you can influence your people's ability to manage it and the long-lasting impact, which we expect to last long after the virus has come and gone. So I think final words for me would be giving your people that lifelong confidence and knowledge to make the most of the money is absolutely key here. And hopefully we've given you some of the detail and ideas to help your people.
Brilliant. Well, that just leaves me to say a massive thank you to our guests this morning to have joined me. But the biggest thank you is to everyone that has dialed in on a Thursday morning to hear us distill the budget. So if there's one thing we'll leave you with, it absolutely will be financial literacy is needed to ride out this storm. Thank you, everyone, and goodbye.
Thank you.
Thank you.